BYD has admitted via a secret phone call that they plan on producing over 1.2 million electric vehicles next year. Tesla? Nobody knows. It's anybody's guess. But my guess is they'll produce about 1.8 million. However, the gap does seem to be closing, with BYD and Tesla both growing very fast. Is BYD actually catching up to Tesla? Hello, my friends. Welcome to the Electric Viking. My name is Sam Evans. You're watching the channel that makes more videos about electric cars and batteries than anyone else on YouTube. If you're new to the channel, welcome, and make sure you check out some of the videos we've made over the last 7 months. There is more than 700 of them. And if you're not new, welcome back. Fantastic to see you all again. Now, Tesla and BYD are both fast-growing EV giants. Now, it still shocks me that many people in the West have never heard of BYD. What rock have they been hiding under? The funny thing is, realistically, most electric car YouTube channels don't talk about BYD at all. It's bizarre. I don't know why that is, but it does surprise me. Now, while a lot of attention falls on startups such as Rivian, Lucid, NIO, XPeng, and even surprisingly Li Auto, I don't know why, but anyway, as well as traditional automakers pushing into EVs such as General Motors, Ford, and Volkswagen, Tesla and BYD are setting the pace here. Now, both of these companies have enormous expansion plans. For example, in 2021 alone, BYD built 6 new battery factories and began work on a $2.4 billion parts factory. That's just the tip of the iceberg for BYD. Many other things happened this year. They tripled their battery output, tripled their output of electric cars versus the previous year, and set in motion plans to massively scale up in 2022. Now, Tesla stock and BYD stock have been big winners in 2021, and in fact over the last 5 years. BYD's returned 561%, and as you all know, Tesla's returned quite a bit more than that. But which is a better bet now? I've been asked this question a lot of times. Well, let's take a look at Tesla versus BYD, and Tesla stock versus BYD stock. Now, Tesla versus BYD's sales. Tesla is the world's largest electric vehicle maker, delivering 241,300 vehicles in the third quarter, up from 201,250 in Q2 and 185,000 in Q1. However, BYD is catching up. New energy vehicles have increased by roughly 10,000 per month for strict 6 straight months. I've talked about this many times. Hitting 91,220 in November, up 241% versus 1 year earlier. Of that, 90,121 were new energy vehicles. That's an increase of 253%. And that includes 46,000 EVs, up 153%, while plug-in hybrids increased by 500% to 43,984. One of the key reasons for that is BYD is one of the few companies in China that makes good plug-in hybrids, and they're well known for it. The reality is, in China, people are not all that interested in plug-in hybrids. They either buy plug-in hybrids from BYD or they don't buy them at all. Only a very small market of China's car market is plug-in hybrid. Now, it's the 6th straight month that BYD has increased their EV and plug-in hybrid sales by roughly 10,000. And they may continue that in December this month as well, based on historical car sale data over the last few years from BYD and from many other manufacturers in China. December is often the biggest month of the year. Now, hybrid sales have skyrocketed thanks to a new fuel-efficient DMI system that provides substantial battery range. In fact, the vehicle with the longest range has about 1,200 kilometers of range, which is insane. So BYD and EV hybrid sales combined are now roughly equal to Tesla's all-electric deliveries. They are far more than those of NIO, Li Auto, and XPeng combined, let alone US EV startups such as Lucid and Rivian. Now, BYD is winding down its sales of traditional gas vehicles, down to just over 7,000 in November, basically phasing out gas-powered vehicles, except for their plug-in hybrids, of course. Both Tesla and BYD have managed to grow rapidly, despite chip shortages that have crippled almost every other automaker in 2021, except for, of course, the electric car manufacturing startups in China. Now, this includes General Motors, Ford, and Toyota. Now remember, BYD makes its own chips, and that has helped them get around this issue. Now, both Tesla and BYD will obviously continue expanding extremely rapidly over the next few years. BYD plans on 3.2 million electric vehicle sales in 2025. I can see Tesla probably selling around about 5 million in 2025. Now, Tesla will soon open plants near Austin, Texas, and Berlin in Germany, and is looking to expand its Shanghai facility yet again, which will happen in 2022. The Austin and Berlin plants will make the Model Y to start. Now, I personally also believe Tesla is going to build another Gigafactory, and I disclose where I believe that is based on all the research that I've done, which is quite a lot. I'll put a link in the description below to that video so you can check out where I think Tesla's next Gigafactory will be. Now, Tesla has said the plants would begin producing Model Y crossovers before the year end at Gigafactory Berlin and Texas. And it looks as though that may have started. I'll put a link in the description below to a video about vehicles sitting in the parking lot. It looks as though production may have actually begun. Now, officially, it hasn't actually happened yet. CEO Elon Musk tweeted on December the 19th that he'll hold a grand opening party for the Austin plant in early 2022. Tesla held a grand opening event at the Berlin site on October the 9th. But as of today, the company has now submitted all the so-called required paperwork to get their final permit processed. But some of the so-called environmental leagues in Berlin have been opposing the opening of Tesla's Gigafactory there, in spite of the fact that a local coal mine actually uses 141 times more water than Tesla's plant. They claim Tesla is using too much water. I'll put a link in the description below to that video as well. Now, obviously, at some point, the Austin and Berlin factories will come online and ramp up production massively. That comes with Tesla almost certainly passing a 1 million annualized run rate of sales in Q4 of 2021. In other words, they'll probably hit around about 300,000 sales for the quarter. Now, in addition, BYD is also adding significant EV capacity. The company recently said in an investor conference that its 2022 new energy vehicle sales target is roughly 1.2 million units, with 600,000 EVs and 600,000 plug-in hybrids. That's up from 600,000 total in 2021. In other words, they plan to double their electric vehicle sales in 2022. But this forecast does seem conservative given the fact that flat sales from November's pace equal an annual run rate of 1.1 million electric vehicles. So it's possible BYD could hit something like 1.5 million next year, coming even closer to Tesla's total figure. Now, BYD says it will open 3 new factories, boosting capacity by another 500,000 vehicles by Q2 of 2022. Now, this realistically could put it at about a 1.5 million run rate for next year. And that suggests that BYD's electric and hybrid production could hit, like I said, 1.5 million, or potentially more than that. Now, Tesla, targeting the luxury and affordable luxury markets, has far higher selling prices on average than BYD. Average selling prices have come down as the vast majority of its vehicles are now Model 3 and Model Y versus Model S and Model X in the past. Now, price cuts were common until 2021, but Tesla has raised prices in the United States several times in 2021, especially in the US. With overall industry production down sharply due to chip woes, Tesla and other automakers have extreme pricing power right now. But remember, Tesla has actually decreased prices in China and in some of Australasia. This is thanks to Tesla's lithium iron phosphate battery packs, which have helped Tesla reduce the cost of their base model vehicles. Now, as overall auto production rebounds over the next year and EV production explodes, pricing power will probably ease somewhat. That's really realistic, isn't it? Now, BYD also has one other benefit: lower cost Chinese production. But its ASPs are much lower, with the majority of EVs and hybrids selling for between $15,000 and $34,000 US, though some vehicles top $40,000 US. Now, BYD does have plans though to move up scale, competing directly with Tesla, NIO, XPeng, Leapmotor, and a range of other companies in China and globally. It will unveil a high-end brand in the first half of next year, starting with a large crossover SUV, which will cost around about $100,000. Now, what about Tesla's vehicles versus BYD's vehicles? Tesla keeps it short and sweet, producing just 4 electric vehicles: the Model S, the Model X, the Model Y, and the Model X. But soon it will also have the Cybertruck. Now, Tesla has long talked about the Roadster, the Semi, and the Cybertruck as future vehicles. And in fact, they have 1.3 million plus pre-orders for the Cybertruck. But those have been pushed back multiple times. And it looks as though Tesla's latest production target is to begin in late 2022 for Cybertruck and to start mass manufacturing in 2023. Now, as far as I can tell, Tesla is still kind of, I wouldn't say struggling, but working on some technical issues with 4680 battery cells. But I do believe they will start producing them en masse in 2022. However, BYD, by comparison, has a slew of models, some with electric and hybrid versions, such as the flagship BYD Han and the fast-rising compact BYD EA1, or the Dolphin, which is a hatchback which sells extremely well in China and is set to go global. Now, in addition, BYD is one of the biggest manufacturers of electric buses and electric utility trucks, with plants in the United States and many other countries outside of China. In addition to that, BYD has gotten a huge amount of bus orders recently in Europe, where diesel buses are being phased out for good reason. They're crap, they're rubbish, they're disgusting. You've seen the black smoke that comes out of them, right? Now, that will serve as a stepping stone to BYD's personal EV ambitions in Europe. BYD also makes EV delivery trucks, garbage trucks, and assembles mobile phones and manufactures the batteries that go into mobile phones. In addition to that, they also provide battery storage for residential and commercial businesses and for homes. Obviously, in much the same way that Tesla does. So what about Tesla stock versus BYD stock? Well, interestingly, their PE ratios are not actually all that different at the moment. Tesla is a truly global EV giant, with the majority of its sales in North America, Europe, and in China. It has notable business in Korea and some other Asian markets, as well as in the Middle East. Now, obviously, it has 2 plants: Fremont, California, Shanghai, China, and soon they'll open plants in Austin, Texas, and in Berlin. Now, as the Berlin plant ramps up, the Shanghai plant presumably will export far fewer Model Ys to Europe, though Model 3 shipments will continue. Now, Tesla's capacity is set to soar. There's no doubt about it. It has no major new markets. However, it doesn't have any major new markets to enter or any new vehicles in the near future, as in 2022, which will be mass produced. Meanwhile, overall auto production should rebound in 2022, with EV output increasing, especially in the crossover sector. This could potentially put a bit of pressure on Tesla sales and their pricing. New US EV credits would provide a Tesla demand boost at home, but there is a growing risk that Congress will not approve them, with the broader legislative package in doubt. However, I don't believe that is likely. I believe what is most likely to happen is that some kind of package will be approved in which Tesla will receive similar credits to other manufacturers in the United States. This will actually give Tesla a significant advantage over what it has right now, because right now, if you buy a Tesla vehicle, you do not get the $7,500 US tax credit. But likely in 2022, all manufacturers in America will get that credit, meaning that Tesla will actually have a bit of an advantage next year versus this year. Now, BYD has a lot of markets to expand into, and they plan on doing that in 2022, as I've spoken on numerous times on this channel. They have just started to sell the Tang SUV in Norway, giving them a foothold for a much larger expansion across Europe. They're also shipping EVs to Latin America, India, the Philippines, Australia, New Zealand soon, and the UK. Now, BYD's low to moderately priced vehicles will serve rich and developing nations, while Tesla's current and planned vehicles are clearly aimed at more affluent customers in more wealthy nations. But America isn't in BYD's sights just yet, although I believe it will happen soon. Tariffs on Chinese-made autos make exports to the US a little bit more challenging than they would be without those tariffs, of course. Now, BYD does not have any public plans for a US EV plant so far, as in manufacturing plant, though it does make buses and batteries for those buses in the United States. Now, Tesla, despite a common belief, doesn't actually make battery cells itself. Well, actually, it does at Cato Road facility in California, but not en masse in the same way that BYD does. The Sparks Nevada Gigafactory is a joint venture with Panasonic. Panasonic makes the battery cells, Tesla packs them together. In China and increasingly in the US, Tesla buys off-the-shelf batteries from CATL, the world's largest manufacturer of batteries, and other Chinese battery giants, and it's increasingly shifting its batteries to lithium iron phosphate in the base models, and I believe this will probably creep up into the mid-range models as well. Trust, BYD batteries are truly including the cells, is made in-house. And in addition to that, their batteries are seen as the safest batteries you can buy. So that is one significant draw card that they have. Now, BYD also sells its batteries to other automakers. The made-in-China Ford Mustang Mach-E uses BYD batteries. In addition to that, Toyota and BYD's joint venture will be made using BYD cars and BYD's batteries. In addition to that, BYD will also be manufacturing electric vehicles in 2022 for another legacy automaker who will simply put its badges on the end of BYD's cars and call it its own, which is what Toyota will be doing as well. Now, there's been repeated but officially unconfirmed speculation that Tesla Shanghai will use BYD batteries next year. Tesla currently uses CATL batteries in its China-made models, but it's looking for additional supply. And BYD, I believe, will supply 10 gigawatt hours of batteries to Tesla next year. However, it's also worth considering the fact that Tesla getting batteries from CATL in some way is an advantage, as CATL produce a lot more batteries than BYD. In addition, CATL is building an enormous gigafactory to provide Tesla 70 gigawatt hours of batteries, and that has already gone into construction this year. Now, obviously, Tesla and BYD do more than just make electric vehicles. That's one thing to remember. Tesla has a solar and battery storage business. Both are growing rapidly, but are just a small fraction of their total revenue. Now, in addition, Tesla also generates revenue from its supercharger network. It's starting to open its network to non-Tesla vehicles in parts of Europe where third-party charging stations are common. In the United States, the supercharger network is still a big moat for Tesla. However, other charging stations are increasing rapidly, with the recently passed infrastructure bill providing funding for more. Tesla does also plan on opening up its charging stations to all manufacturers of any car worldwide. So this could be a significant increase of revenue source for Tesla in the coming years. Now, one of Tesla's most important and most controversial products relates to its self-driving efforts, notably autopilot and full self-driving. Full self-driving has been a key revenue driver and brand builder for Tesla. If Tesla is able to create a cheap, vision-only system that is fully autonomous everywhere and anywhere, the payoff will be astronomical. But for now, full self-driving beta is a level 2 driver assistance system, and we're not quite yet at the level in which it can be deployed as full driver assist. Now, bullish analyst price targets for Tesla stock often assume massive self-driving revenue in the coming years, along with massive EV market share. In addition to making its own batteries, BYD makes its own chips. A BYD semiconductor spin-off with a listing on the Shenzhen Chi-Next is planned within the coming months. Just like Tesla, BYD has an energy storage business. And it recently formed a driver assist joint venture with Momenta, an autonomous driving startup in China. Let's have a look at Tesla and BYD's fundamentals. Tesla earnings are expected to surge 164% to $5.92 per share in 2021, up from $2.24 a share in 2020 and just 3 cents in 2019. Sales jumped 57% in Q3 versus a year earlier to $13.76 billion. Now, one of the big advantages that Tesla have is gross margins. They lead the industry with about 30% average gross margin. Reports are that BYD doesn't yet make a profit out of its electric vehicles, and obviously the sales price is much lower, so that is very possible, yet that can't be confirmed officially. Now, BYD's earnings have declined in the past 2 quarters, 63% and 22% respectively. Sales growth has slowed from 148% in Q1 to 27% in Q2 and 24% in Q3. So the question is, how can revenue growth be slowing as EV sales skyrocket for the company? Well, BYD has been replacing gas-burning auto sales with EVs and plug-in hybrids. But ICE sales are now a small fraction of overall auto sales. So future EV and plug-in hybrid sales should contribute more clearly to overall top-line growth for BYD. Tesla stock's market cap. Now, in terms of market cap, Tesla stock versus BYD stock is no contest. Tesla has around about a $1 trillion valuation at the time of recording this video on the 27th of December. That's still far above BYD's $93 billion. Now, BYD's valuation is above Rivian stock of $87 billion and Lucid stock at $66 billion. It's also modestly above General Motors stock at $80 billion and Ford stock at $79 billion. BYD has a significantly higher market cap than XPeng, NIO, and Li Auto stock, for good reason. But it's worth considering this. BYD is not listed on the US stock exchange, and that significantly affects the number of investors that are able to invest or that know about the stock. Now an S&P 500 giant, Tesla stock has an array of institutional sponsorship, including many IBD-style mutual funds and other A-plus funds. TSLA stock remains the number one holding across ARK Invest's exchange-traded funds, although that has started to decline rapidly recently. I'll put a link in the description below to the video I made about that. So BYD stock has far less big sponsorship, and that does matter. Though Warren Buffett's Berkshire Hathaway has been a notable investor for years, holding more than 8% of the company since 2010, ARK Invest also owns a small stake in the company as well. One issue is BYD stock is listed in the Hong Kong and trades over the counter in the US and other countries. It's very hard, almost impossible if you're in Australia now to buy BYD stock unless you buy an exchange-traded fund, such as BATT or LIT, who both hold BYD. Now, this also means that BYDDF stock shows a lot of mini gaps, with most of the share price action reflecting Hong Kong trading. So, while Tesla still sells more all-electric vehicles than BYD and has a much larger market cap, in many ways BYD is what Tesla claims or aspires to be. BYD does make its own batteries and chips. In fact, it makes almost everything that goes into its own cars. Tesla CEO Elon Musk has long touted a goal of $25,000 car, and I believe that will come soon in China. BYD already sells many EVs at or below $25,000, and apparently most of those at a profit. Now, if and when Tesla moves down market with cheaper EVs such as the Model A or the Model 2, check out my video about that vehicle. I'll put a link in the description below. Then it'll face a vast array of competing models, many from BYD. However, the strength of Tesla's brand will certainly help it in the long run. In the here and now, Tesla sells far more pure electric vehicles than BYD, and at much higher price points. Tesla earnings are booming, while BYD earnings have recently declined. And obviously that's thanks to its transition from ICE vehicles to electric vehicles. It's difficult to do. However, BYD has more markets to expand to in the coming years. It's unclear though when it might try to tackle the US EV market. Now, both EV giants are delivering far more vehicles than rivals such as XPeng, Lucid, or Rivian, or even all of those combined. The difference is stark. So growth prospects are still extremely strong for Tesla and BYD. And I made a prediction for their sales in 2030 in my video about where I predict the auto industry will be in 9 years' time from now. I'll put a link in the description to that video. Now, technically, Tesla stock and BYD stock are among the biggest EV winners in 2021. Though Lucid stock and Ford have had big years as well, both Tesla stock and BYD are struggling but are looking better than most EV plays. So, Tesla stock or BYD stock, which should you buy? Both are among the EV leaders with booming sales, strong growth, and very strong prospects over the decade to come. Both stocks have performed well in 2021, especially since May, but both are struggling a bit over the last month. So is the question here BYD versus Tesla? Or should you just be keeping your eye on both of them? Well, personally, I'm invested in both companies, and a very large sector of my portfolio is Tesla. If it were easy to trade BYD stock, then a very large proportion of my portfolio would also be BYD. If you're based in a country where you can easily purchase BYD, I definitely recommend you do so. Thanks for watching the video, and I'll see you again on the next one. Bye-bye.